And the idea is if you think of taxation as a three-legged stool, okay? One leg is income or production, so that's your income tax. One is consumption, that's your sales tax. And the third leg is wealth, that's your property wealth. So a balanced tax system taxes those three things in a fair way that people perceive as reasonable and spends those monies carefully. So adjusting those is a problem we have to be very careful about. And when people say the current flat tax is unfair, they're not exactly right. The current flat tax is progressive. If you make $20,000 in the state of Illinois today under the tax laws, you pay about nine or $800 in income tax. If you make $200,000, same couple, they're using the roads the same amount, they're sending the same amount of kids to school, they breathe the same amount of oxygen, they're paying 12 times more or close to $9,600 in state taxes. So it's already progressive in the amount people pay. What's not progressive is the rate. And the rate doesn't need to be because the income rises. Yeah, particularly people who have the freedom to move, whose work perhaps is internet based or it's remote and they can do it anywhere, or they travel for a living, or they're retired and have a lot of resources. Those people tend to go to states like Texas or like to Florida or other states that don't have an income tax because they get to enjoy and keep their wealth. Interestingly enough, Texas and Florida both have balanced budgets and both have fully funded pension systems. So even with an income tax, America's second highest property tax, and in the top 10 of states in sales taxes, Illinois is not financially sound.
So for those of us that are not in the upper range, that is the target group that this progressive tax would supposedly gather more money from. Um, how would that affect us? I mean, because it's kind of like, you got extra money, you got more. Why not? Why not carry more of the burden for you?
Well, a couple things. First, the amendment that they're proposing doesn't set brackets or rates into the Constitution. It simply removes your constitutional protection of a flat rate. Second, in targeting people that they claim are wealthy or rich, they're actually gathering in small business people and family farmers, because small businesses and small manufacturers and small retailers and family farmers run their entire operation through their personal income tax. Okay, they're pass-through entities. So you run a family farm, it all goes on your income tax. So it makes people look rich, and when you raise taxes on small farmers, when you raise taxes on small manufacturers and small retailers and small businesses, they're forced to pay those higher taxes. But what happens is they lose business sometimes. They'll reduce operations because they don't have as much money. They can't reinvest. Maybe they can't buy seed or fertilizer or a new harvester if they're a farmer. So when you take that wealth from productive people and give it to state government, there's a cost. And the question is, is that good for the state of Illinois to lose jobs, to lose opportunity, and to lose, you know, activity? Every job that's lost will pay zero state income tax. It's an important thing to remember. The proponents of this don't talk about what the job loss impact is going to be. There's a lot of people. It was an economist named Lafleur who pointed out that as you raise taxes, you actually collect less because there's less income generated in your jurisdiction. People move away, they stop working, they have to close their companies. So you don't gain incremental revenue simply by raising the rate.